Hello, hello, YouTube. All right, welcome to Trading Trail. Okay, we are finally on the ninth day of the market so far. And I kind of want to start this video off not by going right into a stock review, but actually saying thank you guys so much for kind of tuning in. I mean, this has been pretty amazing. I didn't think people would kind of find any of this information useful. I first started the Trading Trail kind of intentionally just as a commitment to myself to study every single day. And in truth, it's really hard to figure out if you're studying the right thing, and so on. And it's difficult to track your progress as a trader. And that's what I wanted to do. I wanted to upload videos and kind of as a video journal, tracking my own progress trading. And it's been an amazing time so far. I'm really enjoying it, and I hope you guys are as well. But more importantly, I just wanted to say thank you guys so much for kind of tuning in. I really did not expect to see something like that. So far, 211 views. Now you might say, hey, that's not a lot of views, but at the same time, I just want to say thank you guys to anyone that's finding value in some of what I'm doing right here. Now, the day is January 15th, and on the left side of my screen, this is the calendar that I have on my wall here. And I've went ahead and wrote in all of the different important CPI, PPI, Fed meetings, stuff like that. Anything that's going to kind of impact what we're going to be doing day trading. But let's get right into it. So far today, pretty slow action. I think today was probably one of the most patient days trading I've had in a very long time. But let's get right into it. So I ended up trading four different tickers here, and green on three of them, and then red on one, which is BKYI. Probably shouldn't have been trading that one in hindsight, but hey, we're sitting up $437.59 in the green today. Very happy with that. And let's go right back up to the top. We're sitting up $437.59. First trade of the day was on MGIH. And for this one, Sensei alerted a 275 break somewhere back in here. First, as price is right coming off of this test of the 10 EMA on the 5. Price is coming up, finding resistance right at 275. Then we bring focus to that 275 break. And what ended up happening, price broke right here. I was still kind of getting ready to trade in the morning, so I didn't decide to actually attack that one so early. But as I noticed, price breaks, comes right back down, holds VWAP. So I was like, you know what? On the next one, right off of holding as support, I want to get in right here for that move higher. And that's exactly what happens. So my first buy is right here. I end up taking some profit off the table right into that next known resistance. We know 3 is going to be a key area. So let's go ahead and highlight those areas in black for the areas that we want to pay attention to. Now, going on to the next one, as I saw that price is holding the 10 EMA on the 1, I decide to add a little bit to my position right here. Now, it's okay. It's actually very aggressive to add right there, but you only add so many shares that it brings up your average. So I'm still holding some. Oh my goodness, I'm still holding some shares from down here. So I can add a few shares as long as my average stays below the 10 EMA on the 1 or whatever your mental stop loss is. So I add just enough shares to bring my average up right below the 10 EMA on the 1. So this is why I trade with so many different hotkeys. I'm just doing block orders for like $100, and then I'll just keep adding until my average starts to climb slowly up. Or if I know that, let's say I have $500 right here, and I'm adding another 500 right here, split the difference. That's where your new average is going to be. General. That's a nice rule of thumb for that. Now, I really don't recommend adding that aggressively unless you spend some time paper trading and doing it. But I add some shares right here, taking some profit off the table, and then taking some more profit off the table as it extends to that 326 resistance that we have drawn from right there, from that wick. So pretty fantastic. So right after MGIH, I think this trade put me up $200 or so on the day. Yep, 230. So let's go ahead. We can get rid of that there. So that trade got me up $230 in the green, and I just kind of let the rest of my shares ride. So after I'm done taking some profit off the table right here, I'll take a little bit more profit off the table as it extends again, and then I'm closing the position on that 10 EMA on the one. This first trade put me up $230 on the day, and then we bring focus onto SGBX. This one was a little bit more difficult to trade for sure. Now, we were looking at a key 1.3 level, and what we wanted to see is, again, we have our 1.3 drawn from this resistance right here. We get that 1.3 break, and we should see that much larger move through that resistance. Playing it so far early in here is somewhat aggressive, let's be honest. Now, I actually got in right here looking for that break through 1.3. Now, right when I noticed that and the price started going against me, this is kind of a false break. The candle wicked above, and we never got a close above, but I'm still in. So I needed to keep this one very, very tight, and I'm aware of that. So I'm very happy with how I executed on this one. Even though I did lose money on this first entry on SGBX, I am still very happy with how tight I was able to keep it. So if we zoom in here, this is going to be a little bit difficult to explain, but if we zoom in here, the key area that I had focus on was this, the top of this candle right here. I was thinking if we start taking out this area right here, then it's going to show room past and below our 123 area. Because if price isn't able to hold this equivalent area between 123 and 125, that means that prices has stopped making a series of higher lows. So this is the recent low. We would ideally look for a move up. Oh my, why are you drawing a line there? We would ideally look for a move up over and create a new higher low. So this is the previous low. Then we would want to see this higher low somewhat play out. Since we didn't ever get that higher low, it means that price is not able to break and hold above this 125 area. So I was really worried that if we got the 125 fail, price is going to skyrocket below. And that's exactly what happened. So right when the candle closed below 125 here, it happened on this moment. A second later, price immediately starts to go against me. So I immediately get place an order. I placed my order up here at 125, but because price moved so quick right there, I'm only getting filled at 123. So now I am pretty grateful because let's be honest, with me playing it from a 1.3 break, how aggressive that entry was, this could have been a much worse trade. I mean, quite generally, could have been a few $100 loss. Now, I'm very, very thankful that I was able to keep it so extremely tight, and I'm only walking away $100 in the red right now. Now, at the same time, I was sitting up $230. So at this point in the day, I'm only up about $100, which at this moment I kind of took a step back and I kind of had to maybe do some breathing exercises. Maybe that would have helped, but I really had to take a step back and be grateful that I kept it so tight. And with the action that we were seeing at this point in the morning, that I did have to kind of recognize that the day that I was seeing play out was much slower. Sensei was saying it as well. So I was like, you know what? I am lucky to still be green right now. If I don't make another trade for the rest of the day, because I'm sitting up $100 right now, because MGIH up 200, lost 100 here. At this point in the morning, I have to realize that if I don't make another trade for the rest of the day, things will be all right. It's a green day, and that's something to celebrate. Smaller green, $100. That's still some amazing money, but definitely not what I would like to be aiming at for this series. Now, being up $100, especially on a slower day like this, would have been perfectly just fine. So I wanted to make it an effort, a certain effort right after this loss to sit on my hands and be patient for the rest of the day. So This kind of text area right here is kind of just going over exactly what I just recapped of a fail of the 125 is going to show room to that 123 support. So fail of this area, move down to the 123. 123, 123 to 125 is basically going to be a glass floor showing room directly to the 10 EMA on the 5. I don't want to get caught in that if I have an average from 130. That is a recipe for disaster, and especially coming off of two nice green days, we need we need to be protecting our gains much more than that. Excuse me. So now the next setup that we noticed, we actually decided not to trade this, especially after this loss on SGBX. I wanted to make an effort to sit on my hands, and I think that was the healthiest decision at this point in the morning. OSTX, this one is a nice one to study, not really trade. There were no opportunities to trade this one, but this is a great example of a blue sky setup. So right here on the left, we have a daily chart, and on the daily chart, its all-time high was 624. I think we had some pre-market or after-hours action right there. But the all-time high for the stock was up here at $6.48. So then we flip over to our 1-minute chart here on the right. So we have our 648 line drawn. Oh, there we go. We have our 648 line drawn. Now, what this means is if price can break above and hold above our key all-time high, no one knows what price has been will trade at within this area. Anywhere up here is considered blue sky territory. Anywhere up there is going to be considered blue sky territory. So then it's just psychological levels all the way up. So price will normally trade within half-dollar, whole dollar increments. So psychological levels above $6.48, you're looking at $7, $8, $9, $10, all the way up until price starts to find some resistance. Since price has never traded in this area before, we don't know what those resistances are. So price has an entire discovery clearing out most of those prices or whatever prices it can reach to. So OSTX, great one to study or at least mark it down and remember what a blue sky setup is. I didn't have any good examples in my kind of notes here for blue sky setup, so that's why I decided to kind of mark it down today. Studying never stops, so kind of glad we have a great example of a blue sky setup. Now again, not really any opportunity to trade it, but something to study nonetheless. Now, right after the loss on SGBX, nothing really else was really setting up in a favorable way. So staying patient. And this is an amazing trade from Sensei. So right after SGBX, he's mentioning, you know what? CPI data. Today was a CPI report day. And normally the market is going to trade much more cautiously until that CPI report is fully released. CPI stands for Consumer Price Index, and it's a big report that will track inflation month over month. It is one of the key reports that the Fed, Jerome Powell, and his advisors are going to look at in order to make a decision on interest rates going up or down. All of this has a huge factor to play with the stock market. So something we just want to be aware of that we're trading around these events. And CPI comes out at 8:30 in the morning. And if we zoom in here, I mean, this is a LeBron moment if I've ever seen one for Sensei. I got to give him that because somewhere about an hour before this trade goes live on SGBX, Sensei goes, I can't imagine taking another trade until around 8:30 with how slow things were in the market. 8:30 happens, and would you look at it? A minute later, we get the breakthrough 1.3 on SGBX. SGBX, this entire time, has been consolidating, moving sideways, finding support, and then right when some good news comes out, aka that CPI report, we get an amazing trade just like that. So let's go through my entries on this. My first entry is actually down here, playing it from 123. I was thinking that since I got caught up here holding from 1.3, I really need to get a better entry. I think this was a phenomenal entry down here at 123. And this is what I call having a starter in. This entry was not full size. Was not full size. This entry down here was with almost a quarter of my regular position. This quarter position here allows me to then size back in at that 1.3 break with bigger size, but at less risk. Because in order for this 1.3 break, we know that price is going to have to hold in this area. If price doesn't hold, this is smaller size, so it's smaller loss. But when we get that break through 1.3, I can size in and I still have a slightly better average. That slightly better average should allow me to escape with profits slightly easier if we saw a move something like this, where it gets the false break through 1.3 and then starts to slam back down right through that support of the downtrend. Now, again, we have this downtrend kind of drawn from the bottom of this candle, which is also lines up with this magically. Would you look at that? And then we also have the top of the wick. So let's draw these key areas with our black marker here. We have this prime area, kind of the start of the downtrends. We have the downtrend to this resistance right here, landing on top of the body of the candles. Also coming down here, lining up perfectly. Then we also have this, which these two downtrends, we're going to label them. This is going to be the first one. This is going to be the second one. The break of the first one is a much more aggressive downtrend. I say aggressive because if you're trying to find shares down here, it's aggressive. This is a very aggressive trading style. So this is the more aggressive downtrend. Now, at the same time, I doubt that larger move is actually going to happen until we get the break of the more conservative, consolidated, better looking downtrend. And if we notice, the second we get the break of the downtrend right here, of the more conservative downtrend, the second we get that break, that's what initiates that larger move. The more consolidated one is normally a little bit safer. This more aggressive one can, again, be a little bit more aggressive, but provide some better, safer entries. But we know that larger move isn't going to happen until we break this more consolidated look of the downtrend. So this is where I've seen a lot of questions, and God, I've probably even asked Sensei this, right? Of where do you draw your downtrend? Do you draw your downtrend at the bottom of at the top of the body of the candle, or at the top of the wick? In this case, I drew both on my chart because I wanted to pay attention to both of those areas. The thought process behind this, now Sensei could probably correct me, but what I'm thinking and what I'm going to think myself through is anywhere within these kind of rays of the downtrend. Why did it get rid of it there? Come on. Really? It's deleting stuff. Didn't know it did that. There we go. So anywhere within this kind of area within the two downtrends is kind of, in my eyes, price coming up to test the downtrend range. Let's think of this maybe as a range. If it's just testing the range, it's not going to break out of that downtrend until it gets out of that more consolidated downtrend. So that's another reason why we keep focus on this one for that larger move. Now, if this is a range of the downtrend, let's imagine that other bulls, other traders are sitting down and drawing one or two of these downtrends. Any other trader is probably that trades with downtrends is probably going to have some type of this downtrend on their chart. So this is where I kind of like to think of it as a range where if we were able to find support somewhere in right here, and then that break of that second downtrend is basically the confirmation that we're holding as support because we needed the break, the hold, and then the move higher. The break of this second downtrend, in my eyes, is the confirmation that we were able to hold in a very strong way. And then we get that move much higher. Quite phenomenal. Like, I'm still blown away that Sensei was able to land this one and call it right back here at like 6:45 in the morning after this trade right here. He's saying, I can't imagine taking another trade until 8:30. 8:30 happens, 8:31, boom, we're all should be setting up, plus 20%, something like that. This was a phenomenal trade. Truly phenomenal trade. Now, in hindsight, 2020, after I do some scaling out, so let's kind of zoom back in here. So SGBX, we land it from down here, and then I'm scaling out up here, and then I close the position right on the 10 EMA on the 1 fail. Now, in hindsight, I could have kept holding. I truly could have. The 10 EMA on the 5 continued to keep holding this purple line, which often lines up. This is the 50 EMA on the 1, which often lines up with our 10 EMA on the 5. It's just difficult to screenshot multiple different time frames and all put them in the same note. So that's why in this example, we're just going to keep focused on the 50 EMA and the 1. Notice how this area continues to hold, and then we get that move higher right into market open. Now I do scalp it for like another, I think it was another $60 within here from the 163 break. But not really the most favorable setup, so I probably could have gone without trading this. Now I was able to turn it into a winner, which is great. But this is not the type of trading that I kind of like to see to consider myself a better trader. This is scalping. We want to be trading. There's actually a very big difference between those two, or at least psychologically. This is a trade. The consolidated setup, the break of the downtrend, price holding support. This is a trade. This is a scalp. There's nothing to trade off of here. I'm just getting in and getting out. Now, I was able to line it up with that 163 break, and then I'm taking profits, and then I'm scaling out on the 10-1 fail. Very nice trade, very nice entries for that 163. So arguably this is a setup and it is a trade, but kind of scalping opportunities. So I was very, very happy with SGBX because we went from red $100 on this stock to now I'm sitting up $200 on this stock. So that is a nice $300 trade, basically. Very happy with how this one turned out, especially with being patient, letting it set up, because I can almost guarantee you the trader that I was a year ago would have lost a whole lot more money on this front side, playing it for the first time, and then would have revenge traded somewhere within here, and then not had enough settled funds or stayed patient enough to catch the larger move from playing it again from that 1.3 break. I know I have a lot of lines on my chart here, so bear with me, but I am very, very happy that I was able to stay patient and trade less, which made me more money. Let's go ahead and move on. Now this is market open, and VMAR is the only one that was setting up. I called this one out for a 215 break. It was actually looking pretty good for a 215 break. Now, we've seen this time and time again, this idea of the setup. Now, on the left here, this is a 5-minute chart. And on this 5-minute chart, we can tell that price is obviously holding the 200 EMA on the 5. Matter of fact, it's respecting this recent low. So if we go ahead and draw in a support that would be somewhere within this area, price is respecting it and continuing to make higher lows. This is the low, this is a higher low, this is the next higher low. And price at market open comes down and kind of tests this liquidity area. Let's zoom in here. Price tests this recent low right here, and then continues on much higher. Now, I did actually trade this one. I traded it with much smaller size, especially kind of having the roller coaster of emotions that is, up $200, losing $100, and making it all back in the next trade. That's a roller coaster of emotions over multiple hours because I was trading from 6:30 all the way until 8:30. That is a big roller coaster of emotions to go through. Now, I did decide to trade VMAR because I liked that 215 break. Notice how it also, at market open, lined up with a nice downtrend break here. That downtrend break, why does it keep moving everything, man? This downtrend break, I'm looking to grab some shares right here, taking profit and scaling out as soon as possible into market open. So right when I scale out, I'm selling 50% of my position on that first target hit. I get that nice 5% move into profits, and then I'm taking 50% off the table. Now, my thought process here is just hold the rest of the shares as long as the 10 EMA on the one holds. Take some profit off the table as price is extending far away from the 10 EMA on the one. Take some more profit off the table up here when price is up here, testing our 257 resistance. And then I simply close my position when the 10 EMA on the one fails. Now, another thing to kind of keep in mind is theoretically, if price, let's use the black marker here. Theoretically, if price broke, found resistance up here, and then came back down and held support within this area, is that not holding support of the downtrend? It is. So if price were able to hold support of the downtrend, you could then keep focus on it for maybe playing a 257 break or seeing how things develop. But I decided to go ahead and close my position on that 10 EMA on the one fail, which ended up being a perfect exit. So this was another nice little trade. I probably broke a few of Sensei's rules right there because he wasn't trading VMAR. He didn't like the setup. That's perfectly fine, which is one of those reasons why I decided to kind of go in with some smaller size on this one. But nonetheless, I'm very happy that I ended up landing that one. Then I did also have some scalps on BKYI. This is kind of what I want to try and teach myself in the coming days of I need to be looking for trading opportunities, not scalping opportunities. These two trades are scalping opportunities. I need to be waiting for the trading opportunities that we got on MGIH and SGBX. Quite phenomenal day. Plenty of stuff to study and learn from today. Quick little thing. Tomorrow, there is going to be, to my knowledge, no CPI, PPI, or Fed meeting. So now we should just be a normal trading day into Thursday. Again, that's going to be January 16th, the 10th day of the market being open so far this year. Pretty phenomenal. I'm happy that I'm sitting $437.59 in the green. If you guys have any questions, comments, concerns, you guys know the drill. Please throw a comment, reach out to me, or if anyone has any trade that they would like my 2 cents on, or for me to go over, just please feel free to reach out. I'm always available. One other thing, I would really like to thank you guys so much again for kind of tuning in and kind of watching me walk myself through my own trades, because that's what this is all about. It's my trading trail through 2025. If you guys have any questions, comments, concerns, thank you guys so much. It's kind of exciting. Wasn't expecting to get 30 something subscribers in the first week of me doing this. Here's to kind of everyone else's growth into 2025. Let's have an amazing year, guys, and I will see you guys tomorrow for the 10th trading day of the year. Adios, guys.